This is Craig Haugard with your Financial Issues Ag Update. Well, yesterday gave us a choppy session in corn, with spot futures a quarter-cent lower at the close. The ethanol and livestock industries continue to struggle, and that's putting pressure on corn prices. Weekly export inspections came in at a very solid 40.5 million bushels, and the weekly crop progress report shows that the corn crop is now 3% planted as farmers across the fruited plains start to gear up for the spring planting season. As I record this, the overnight spot corn futures are trading unchanged. Soybeans were under pressure as China continues to favor Brazilian beans over the U.S. Right now, the economics favor Brazilian origin beans, with Brazil having an advantage over the U.S. of anywhere from 25 to 35 cents per bushel. Weekly export inspections continue to be disappointing as they came in at 16.2 million bushels last week. In the overnight trade, we have spot soybean futures trading 2 cents lower. We had two major stories in wheat yesterday: low temperatures in the southern plains this past weekend, as well as the 5-day outlook, and the 165,000 metric tons of hard red wheat sold to China. The temperatures hit the danger levels for jointing wheat in western Kansas and western Oklahoma over the past weekend, with temperatures in the mid to lower 20s, with more to come apparently in the next 5 days. It's considered damaging to jointed wheat when temperatures drop below 28 degrees Fahrenheit for extended periods. It appears that roughly 25% of hard red winter wheat country may have sustained some damage. On the positive side, China's purchase of hard red winter wheat was welcomed, but it's split over 2 marketing years, with the majority of it in the new crop season. After the close, the crop conditions and progress report had winter wheat crop rated at 62% good to excellent. Of course, that survey was conducted prior to the past weekend. The report also indicated that 5% of spring wheat has now been planted. In the overnight trade, Chicago is down 3, while Kansas City and Minneapolis are each trading a penny and a half lower as I record this. Cotton futures were under pressure yesterday, with the May futures closing down 161 points as they settled at 52.76. After the close, the weekly crop progress report showed that 9% of the cotton crop has now been planted. In the overnight trade, spot futures are trading an additional 6 points lower. Livestock futures were under immense pressure yesterday. June live cattle futures were down the $3 limit. May feeder cattle futures were down their $4.50 limit, while lean hogs, who recently had their limit changed from $3 to $3.75, were down the new limit. Lean hog futures were hit extremely hard by the news that Smithfield's Sioux Falls, South Dakota pork processing plant will be closed until further notice as coronavirus is spread among its employees. That plant processes roughly 4 to 5% of all the pork produced in the United States, and so that closure puts a lot of pressure on hog prices. Class 3 milk futures resumed their downward slide yesterday. When the closing bell mercifully rang, May futures were down 45 points as they set a new life of contract low and settled at 10.98. In the overnight trade, spot futures are down an additional 9 points. Cash livestock markets were stronger yesterday. Choice beef boxes were $1.93 higher as they closed at $225.86, while selects are up $3.07 to settle at $211.40. Pork carcass values were a couple of cents higher as they closed at $52.87 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.